if you had money in your whole life policy, you could go out and execute deals. And that's when deals were most lucrative, is when there was blood in the streets and everybody was scared. And I viewed whole life, and I've spent a lot of time reflecting on how it works for different people. And my whole goal is to make it easy and accessible for people to realize what that is for them. But first and foremost, with a whole life policy, it's going to offer a tremendous amount of safety. So putting your money in a whole life company, especially the ones that we recommend, which is a mutually owned and participating whole life company, it's going to provide some of the safest place where you can put your money. And the reason I say that is because the insurance company's whole job is to mitigate risk. So with a bank, the bank's job is to take on risk. That's how they actually make money. But with a whole life or an insurance company, they're always trying to mitigate risk and eliminate the risk. So when they execute a policy, they know that it's going to be guaranteed throughout your entire life. And that's what makes it so powerful when you're putting money into these policies. Another huge component of why somebody would put money in their whole life policy is because the access that you have. You have access to either loaning the money or withdrawing the money. I recommend using the loans so that you can not interrupt the compound interest that you have with this policy. And that's a really powerful thing that a lot of people will look over, and the argument with whether you should put your money in a whole life insurance policy or not. But by not putting your money in the whole life policy, you're not respecting how much money that's going to make you in the future, because you don't allow it to have that uninterrupted compound interest, which is huge. And then you also have the protection factor. And you're not just protecting your family with the death benefit, but in most states, you're creditor protected, you're bankruptcy protected when you're putting your money in these policies. So that's like super powerful. That's also really overlooked when the whole argument with the whole life, whether you should put your money there or not. And then the control that you have. You just, because you have that access to liquidity, because you have access to this money, especially like when the market takes a downturn, like let's say that 2009, 2010, when the banks tightened up lending, that wasn't the case with, if you had money in your whole life policy. You could go out and execute deals. And that's when deals were most lucrative, is when there was blood in the streets and everybody was scared. And I think Tony Robbins says it best: prepare for the winter. We don't know what the future holds, but just based off of how everything that we see with the markets, like nothing makes sense. Just be prepared for the worst, right? And then also be prepared to jump on opportunity, because when there's blood in the water, that's when the biggest opportunities you'll find. But overall, 2024, once the election goes through, I think they'll figure out a way to prop up the economy. And then whoever gets elected, no matter who it is, that's when I feel like there's a much higher chance of everything just falling apart and getting ugly.